Hello and welcome to Speak Accounting Blog, the blog where we make accounting easy and fun. Today we're going to talk about salaries and wages expense and salaries and wages payable. What are they? How do they differ? And how do we record them in the accounting books? Stay tuned to find out. Salaries and wages are two types of compensation that employees receive for their work. But did you know that they are not the same thing? That's right. There are some differences between them and they affect how we account for them. Let's see what they are. Salaries are fixed amounts of money that employees earn per month or year, regardless of how many hours they work. For example, a manager might earn $6,000 per month as a salary. Wages are variable amounts of money that employees earn per hour, day, or week, depending on how many hours they work. For example, a cashier might earn $15 per hour as a wage. Salaries and wages expense is the cost of paying employees for their work during a specific period. It is an expense account that reduces the net income of the business. For example, if a business pays $10,000 in salaries and wages to its employees in January, it records a salaries and wages expense of $10,000 for that month. Salaries and wages payable is the amount of money that the business owes to its employees for their work at the end of a period. It is a liability account that increases the total liabilities of the business. For example, if a business pays its employees on the 15th of each month, it will have a salaries and wages payable of $5,000 on January 31st, representing the amount it owes to its employees for the second half of January. Now that we know what salaries and wages expense and payable are, let's see how we record them in the accounting books. We use journal entries to record the transactions that affect the accounts of the business. A journal entry consists of a debit and a credit, which must always balance. A debit increases an asset or expense account and decreases a liability or revenue account. A credit does the opposite. Let's look at an example. Suppose a business pays $4,000 in salaries and $6,000 in wages to its employees on January 15th for the first half of January. How do we record this transaction? Well, we debit salaries and wages expense for $10,000 because we incur an expense of paying our employees, and we credit cash for $10,000 because we reduce our cash or bank by paying our employees. The journal entry would look like this: debit salaries and wages expense $10,000, credit cash or bank $10,000. Now, suppose the business owes $5,000 in salaries and wages to its employees on January 31st for the second half of January. How do we record this transaction? Well, we debit salaries and wages expense for $5,000 because we incur an expense of owing our employees, and we credit salaries and wages payable for $5,000 because we increase our liability of owing our employees. The journal entry would look like this: debit salaries and wages expense $5,000, and we credit salaries and wages payable for $5,000. And that's how we record salaries and wages expense and payable in the accounting books. As you can see, it's not that hard once you understand the concepts and the rules. I hope you enjoyed this video and learned something new. If you did, please give it a thumbs up and subscribe to my channel for more accounting videos. And don't forget to leave a comment below if you have any questions or feedback. Thanks for watching and see you next time.